What's good, YouTube? It's your boy Swing Trade Shack back with another video. Sorry if my voice sounds stuffy, I am sick right now, but nevertheless, today we're going to be talking about GameStop, ticker symbol GME. I'm going to be going over the recent price action and my overall long-term outlook on GME. And as always, if you enjoyed this video, smash the like button and subscribe for future videos. We are almost at 200 subscribers, so I appreciate anyone who wants to help me get there. Now, before we start, just a quick disclaimer. I'm not a financial advisor, and this is not financial advice. This video is intended for entertainment purposes only. So here's my long-term scenario for GME. I'm still very bullish on the price action. The second wave down has lasted much longer than I previously predicted. So what I had originally saw was a test of our demand zone here. And I expected that we would see a strong move, which we did see. And this would start the wave 3 to the upside, which would bring us to about $500. Now we've seen strong resistance at about $200 here. So about here. And then we've seen strong resistance at about 175. So this second wave has lasted much longer after testing these resistance levels. And these short-term resistance levels have led us to a short-term downtrend. But this downtrend has come on very low volume, as you could see. Now, when you look at charts, you can see where price is going, but volume tells you how price is getting there. And when you see selling on very low volume, it suggests that the long-term uptrend remains intact. And it generally occurs as price moves towards support levels. As you can see, the volume has been very low as we've reapproached this demand zone / support zone between about 138 and 115, with my ultimate support line being at 102.84. Now, if everyone were selling, GME would have already hit the floor. We wouldn't be still trading at $150, and we would be seeing much higher volume. But this is not what we've seen, and I don't expect to see this unless we close below this support line at 102.84. Low volume indicates the failed attempts at manipulating the stock to lower prices, along with people with weak hands just exiting their position. Maybe they don't have as much risk tolerance. They got in at bad prices and they just want to exit before they lose a lot more than they intended to. The low volume on the downswing just tells me that there's still a lot of bullishness in the market for GME. And with the lower volume and lower volatility, the shorts are having difficulty driving prices lower. Now, something you'll have to also keep in mind is that it does cost money to short a stock as you are borrowing the stock. So the longer people fail to drive the prices lower, the more quickly the shorts will have to cover their positions. So in my opinion, as long as we don't see price close below 102.84, which is a psychological level for the markets and where we may see volume pick up, I'm still bullish on GME. Now in the short term, we do have some bearish market structure. Where is this thing? So as we could just see through our lower highs, we are bearish in the short term. Price has been going down. Our short term exponential moving average has crossed below our longer term one, being the 10-day crossing below the 20-day. And we have also seen a close below the 50-day moving average. Now in the past, this 50-day moving average has provided us with an explosive move away, as seen here and seen here when we touched it. This is our green line here, the 50-day MA. But in this touch, we have not seen volume pick up or an explosive move away, and we actually saw a close below it. So as of right now, I wouldn't even touch this stock until we get back within our zone, because that's the last time we saw volume pick up. And this is where I expect bullish volume to increase once again, as we did see here and here when we touched it on this candlestick here. So as of right now, I just want to wait to see price get into this zone once again. And when this happens, I'll be outlining some buy setups that we can take in this zone once we arrive here in some future videos. So it's important to trade in these zones, as since volume was higher here, it means more traders are looking at this level. When more people are looking at this level and buying at this level, it generally provides you with a higher probability of success than buying based on rumors or waiting for news catalysts. You can minimize your risk by placing your stop loss below the zone, which would be near your entry and would limit your losses. Stop losses will save you a ton as you become a trader. It'll save you from a hole, and it'll also save your confidence in future plays. Since 102.84 is the level that would invalidate this trade for me, I like to minimize my risk and maximize my reward by finding high probability setups in zones as close as possible to this level. So right now, just to summarize, we are in a short-term bearish downtrend, but we are entering the demand/supply zone where we've previously seen bullish volume pick up and where we will likely see it pick up once again. So once we get in this zone, I will make a future video outlining the different scenarios that I would like to see before we consider buying this stock so we could minimize our risk and maximize our reward. So if you enjoyed this video, smash that like button and subscribe for future videos on GME, and I'll see you guys in the next one. Peace.